We're coming to you today with a review of the first half of the year and then what we see going into the second half of the year. From an economic standpoint here in the U.S., it's all been influenced about what we've seen in D.C. So whether it's the Liberation Day and what that did for the first quarter and second quarter of economic growth, what does that mean from an inflation standpoint? What does it mean for economic growth? What does it mean for the Federal Reserve? This has all resulted in quite a bit of volatility around consumer and business spending, a lot of uncertainty about what the future of economic growth looks like as the White House tries to reorder the global trade. We saw a pretty dramatic pullback in equity markets, not just here in the U.S., but globally in the beginning of the second quarter, only for these markets to recover and end the second quarter, many of the global indices sitting near or at record highs. Let's take a look at this chart and break down from an investment standpoint what we saw in the first half of this year. And you can see that on the left here, this is U.S. indices. The U.S. equities all did recover from that 10 to even 20% correction that we saw in the markets. You saw the S&P 500 and the growth sectors lead. This was driven by the tech sectors. You did see the small cap area not able to recover and remain negative through the first half of this year. But the big story was this rotation into international equities. And you can see that with the blue bars, whether you look at Latin America or Europe. A lot of people rotated out of the U.S. with this heightened political uncertainty and focused on some of those areas of global equities that have been lagging really over the past decade. When you look at fixed income, you saw the majority of fixed income in positive territory. This is because there was a lot of uncertainty about what the tariffs would do to economic growth. And we saw, as we mentioned, the consumer confidence, business confidence, all of this very weak. That resulted in lower expectations for economic growth. From a commodity standpoint, in the green bars, you saw a big rush to gold, precious metals. These were driven by the heightened uncertainty around growth, but also inflation, as well as you saw a pretty big decline in the U.S. dollar. This is because we continued to see that rotation. People were very concerned about what was happening from the political standpoint and what that meant for not only the U.S. dollar, but also U.S. equities.